Hey everyone, I just wanted to go over some of the recent PhantomSpot price action from the past week or so. As always, this is not financial advice. This is just my own thought process that I wanted to share with you guys. So with Phantom Prints, we know where SPY wants to go, but not when. Because of this, I do like to keep a close eye on several of the closest open prints, aka prices that have not yet been traded at since that Phantom print came through the tape. And if you remember, you know that I always keep these levels on my charts. On April 18th, there were 4 sets of 40370 prints that came through the SPY tape. And then by Wednesday, April 26th, SPY traded down to 40378. Price was within 8 cents of filling these 40370 prints, and then it decided to reverse. This reversal was so strong, and then the next day at that same time, SPY was about 10 points higher. And then the following day, we had even more continuation. And at this time, we had open prints sitting in the 416.50 to 416.78 range, shown by these white lines. And price topped out on Friday around 416.31. So we were very close to filling these, but not quite. So for that weekend Sunday analysis, I remember telling members that I would keep a close eye on these prints and I would treat it as a normal resistance. If price could hold above that level, I would consider the possibility of trading up to the 419.25 Phantom spot. But if it failed, I would consider that a reversal point. Price rejected and trend became pretty steep to the downside. And then within 4 days, SPY was trading back towards those 40370 prints. But this time it stopped just 4 cents shy and history repeated itself. Price reversed, and the next day there was a 10-point move back up. This is such a great example of why it can be beneficial to trade the phantom spots as if they were just regular support and resistance levels. If support holds, you could look for a bounce, or if it breaks, you could look for continuation downside. I know several members entered their longs at that first 40370 level, and then they exited around this 416 area. And then from there, they became short bias for the days to follow because we couldn't get back over this 416 area quite yet. And then they exited their shorts at this 40370 area again. I know this is cheesy, but it is so true. You can never go broke by taking profits. And these were all good trades, so always just be proud of yourself. This was awesome. If trading level by level on smaller time frames is too much for you and kind of makes you a little buggy-eyed and makes you lose sense of the bigger picture, please just let this be your sign to simplify your trading. Just follow along with the phantom prints and put the closest open prints on your chart like I do. Then let the trend be your friend. If it gets to one end of your range and looks ready to reverse, just take a chance and take it maybe with lotto size only. Just get used to taking that chance and following your levels and your trend and your phantom spot. And if your range doesn't hold and trend pulls you further, just adjust your levels. You have all the data in front of you in terms of where the market wants to go. Just rely on trend and your skills to figure out the win. It'll be such a great feeling when you get it right.